Hello, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a good day. We're certainly getting markets go in our expected direction at the moment, and that is a big sell-off in US equities and Australia looking soft too, and a big bounce in the US dollar, falls in the euro, the Australian dollar. So things are running reasonably well from our expectations and view. In terms of economic data, in China today, we saw inflation move up from 1.8% to 2.1%. That's something to keep an eye on, but I'm not expecting to see inflation in China have the same sort of problems as it's had in the United States and Europe. It's a very different situation in China. And as they come out of COVID, inflation will pick up. And that's to be expected. It was interesting, though, that producer price inflation in China did decline on the month, so that will take the wind out of the sails a little bit as we move forward over coming months with regards to inflation in China. So certainly the PBOC will be keeping a close eye on this uptick in inflation, but it's nothing to be concerned of the kind of situation that we have in the Western economies. Over in Japan, producer price inflation was an entirely different story. Over there, producer price inflation was up 9.5%. So very strong indeed, and that is going to continue to influence the Bank of Japan toward, but not maybe too hastily, but towards some monetary tightening. And so I think probably there is some room for that kind of currency play for the yen to develop there. It already has, and to develop a little bit further there. But at the same time, the US dollar is being strong, so perhaps the euro yen could be an interesting cross to look at in that regard. Over in Europe, though, people are very excited, and European shares are doing very well, holding up better than US shares. So I think a lot of global investment firms, European, UK-based, Asian-based, even US-based, are starting to recognize that the US economy has some rather significant problems that perhaps Europe doesn't. So Europe has the problems of a war on its doorstep and various lack of supply of energy and inflation problems generally. But the United States may have more complex economic issues to face in the years ahead and may underperform Europe, in fact. So a little bit of a movement higher in equities in Europe. So a little bit of a reweighting, if you like, globally, still going on away from US equities towards Europe, I would suggest. And I think it's a process that's only just begun. So that could have a long way to run still, and worth keeping an eye on. In terms of equity markets, though, it has been, as we've been forecasting, that it was really pie in the sky, fairy tale stuff to be talking about a Federal Reserve pivot, and that the US economy was going to be fine and somehow miraculously strong in the second half of this year. Neither of those scenarios look at all achievable at this point, as the US economy plateaus maybe a little bit, but it's certainly going to be hesitating around flat to negative to slightly positive growth, and that's all we're going to get out of the United States this year. Whereas the Federal Reserve still has an inflation fight on its hands and will be raising interest rates. As I've pointed out previously, I do believe the Federal Reserve made an error, a mistake, by reducing its rate hikes to 25 points. It could have been done in 2 or 3 months, but now, because they're only moving in 25-point chunks, we might see a further 4 to 6 months of interest rate hikes from the Fed. None of this is factored or priced in by market sentiment, which really did get very carried away with itself. So I would think that there is real risk here. Look, there is a chance that US equities are holding on by their fingernails just here, right now. But US equities need to close significantly higher in New York tonight, or it's going to be really very quickly turn into a rather savage bear trend for US stocks, and that will influence sentiment around the world. So it is certainly something to keep an eye on. My view is still keep protecting your investment portfolio and hedge against this recent US stock rally, because it's probably already completed now. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.